How's it going, guys? Welcome back to another video. Thanks for tuning in to Stock Essentials. My name is Alex, and today we're going to be going over context logic, Wish stock. So Wish is one of the most talked about stocks in the stock market for the daily and the weekly top chatters on WallStreetBets Reddit page. So we know there's a lot of people who are buying into the stock, a lot of people who believe into it, and we've seen some crazy WallStreetBets YOLOs that we've made some videos on in the past few days, with some people putting in as much as $4 million into this stock. So right now, context logic, Wish stock is at $13.47 a share. I'm currently holding 200 shares, and I plan on holding it for quite a while. Not only for the squeeze, the possible squeeze that's going to occur, because remember, short interest on this stock is pretty high, as we can see right here. So there definitely could be a nice short squeeze if there is enough people buying into this stock. So I'm going to be holding my shares because of that, as well as for the long term. Because Wish is a global e-commerce website, as well as an app connecting close to 100 million active users, and there is over 500,000 merchants selling products on the platform. So Wish, compared to other platforms such as eBay, appears to focus more on the user experience, and that's really good because we know Amazon is focused on customer experience as well, and we can see that customers really enjoy Amazon because of the great customer experience. So Wish focusing on the customers is really good, and it's really good for the long term as they continue to attract more and more customers. Wish is known as a platform where you can buy cheap products, but it's basically just an eBay where anyone can sell on the platform, and they're even partnering with some other companies to be able to sell on their platforms as well. So Wish is definitely a great stock for the long term. Also considering with how far down the price is in the past year from it IPO'd when in mid-December, around $24. It's down 43% in the past year, as well as over 50% down from its all-time highs. So if we can see the stock go to all-time highs, you're pretty much going to be doubling, possibly tripling your money from this price point. I got in at around $10.91. Wish I bought more. But I will continue to hold my position and possibly sell cash secured puts in the short term in order to capitalize on the high implied volatility, as well as possibly buying the dip on the stock if it does happen to drop. So let's take a look at the options chain and go over some options that would be worth considering purchasing. So if you want to play Wish, you should do it pretty far out. Do it a few months out because that will help you with the time decay. The further out the expiration date, the less time decay on your options there will be. Because remember, every single day, the value of your contracts become worth less and less, and the closer it is to expiration, the time decay starts to ramp up. So by giving ourselves a lot of time on the options, we're going to be able to hold the contract longer and maintain most of its value until the date approaches. So we have a lot more time for the stock as well as the option to play out, possibly waiting for the short squeeze. So something like December, even October, would be pretty good. I would recommend at least 3 months out from now, just to give yourselves a lot of time for these options. And also these options are pretty cheap. It's only going to cost you a few $100s, so it's perfect for small accounts. But if you're going to be selling options, you could sell covered calls. You could do something like at July 9th expiration, you could sell something like a $16 call. But of course, the risk here is you're going to be capping your upside. So if Wish goes to, say, $25 by next week, you're going to have to sell your 100 shares at $16 each, but you do collect $65 of premium. So I'm personally am not going to be selling covered calls on this stock because I don't know if this stock will have a nice pump in the short term. So I will continue to sell cash secured puts until until some big price movement happens with the stock. So let's go down to selling these two puts. I'll probably do some $12 or $12.5 strikes, and I'll put down $1,200 of collateral in order to sell these puts, which is not that bad. So if you have a smaller account, this is a great stock to sell puts on because the stock price is pretty low right now. And you'll collect around either $43 or $65 of premium for selling this option. You could even do the $13 strike and collect $95 of premium, and that would be a really good cash secured put to sell as well, collecting that much premium in just a week and a half. So I'm considering the $12.50 strike for $65 of premium, which just means that if Wish stays above $12.50, the contract expires worthless and I keep the premium in full of $65 of profit. If Wish goes below $12.50, I just have to purchase 100 shares at $12.50 each. So it's basically you either win on the premium or you win on buying the dip, because it's a lot safer than outright buying 100 shares, because if it does dip, then you are going to have a lower cost basis on your shares compared to if you just bought it right now. So that's my strategy on Wish. I think it's a great buy for the short term as well as the long term. There's a lot of great things with this company, and it seems to be really improving its customer experience and platform, so it's making it more attractive to more users. Because remember, they have 100 million monthly active users, and they have over 500,000 merchants selling products on their platform. So that is not a small number to be taken lightly. But that's about it for this video. If it helped in any way, please leave a like, comment down below if you have any questions, any concerns, and of course subscribe if you're new here to the channel. It helps out a lot. Thanks for watching.